Well, good afternoon, Maverick traders. It's Joe. It's Thursday. It's the 26th of May. Let's get into a market roundup as these markets kind of did what we expected them to do. This is my opinion. You're welcome to follow it. Just take responsibility for it. All right, that's enough. Let's get into a market analysis because I was not sure if this bounce was actually going to come to fruition, to tell you the truth. It looked really good Friday because we'd retraced the majority of that loss, and then Monday, here we go. I expected a bigger candle on Tuesday. It hesitated. I was thinking to myself, boy, this might stall out, but it didn't. It came a little late, and it came after some FOMC minutes. Let's jump right into it, guys. The Dow up over 1.5%. The S&P just shy of 2%, and the NASDAQ over 2.5%. So it's a solid bounce across all the markets. Even the Russells, the oil, and gold all finished to the upside. I thought that energy was going to pull back, that oil number, and it didn't. We'll get to the heat map in a minute, but this was a very broad-scale participation, a very classic bounce or move off of a bottom. Is it the bottom? I said this yesterday in the Wednesday update. I don't think so. Whatever. We'll see what happens tomorrow. So what was going on? Well, the Fed stays on track for a 50 basis point pace. However, they're focusing on a soft landing, thinking that they don't have to go any more aggressive than 50 basis point pace. I understand inflation's still super high, but they're seeing signs of leveling off, and I do believe that it's because we've got a strong consumer out there. Now, there's some numbers that are disheartening. Durable goods orders was just awful. Pending home sales dropped again, folks. That's 6 straight months in a row. Once again, though, it's tough because that's off of all-time highs. We knew that raising interest rates was going to curb the housing market. The consumer is still out there, and I do believe that their activity is going to keep things strong. Another thing to make note of, folks, employment numbers were good. Unemployment was just right across the level. People are working. So I imagine this is going to be this push-pull when it comes to, can this consumer just burn through this high inflation over the summer? The Fed does what it does, and we'll eventually just kind of mellow out. Now, if that's true, we could be in for kind of a flat to slightly optimistic summer. If one exceeds the other, if the consumer just decides to throw in the towel, we might get a capitulation, and we might see a pretty aggressive move to the downside. So there's my 2 cents for what I see going into the summer. Now that can change from day to day. The good thing is, folks, that's why we do these end of days, because we just go ahead and chart. Now, what I think about today's action, you could see that we had a pretty good move today following that Wednesday minutes. Now, those Wednesday minutes were pretty cool because it just immediately the market started to take off due to the fact that the Fed wasn't any more hawkish. I shouldn't say hawkish, pessimistic. They're still hawkish. They're going to stay in line. In fact, they raised the inflation rate. Their target's 2.5. They raised that to 3 because they know they really can't tackle it without creating a lot of problems. Once again, folks, looking for a soft landing. Well, that was taken with optimism. Now, why I think this is a bounce? Well, first of all, it took a little while to get going. I expected, here's this Monday candle. I thought Tuesday was going to go. Wednesday, we'd be at this 410. Okay, we stalled out for an extra day. That's fine. Needed a little bit of motivation to move higher. However, not a lot of participation yet in this volume, so I'm just going to call it a bounce for now. We are still below. We're actually just above that average. We're below the 410. Resistance is what I was looking for when it comes to the overall markets. So what would be the worst thing that could happen? Well, I shouldn't say the worst thing, but what would be the obvious thing that could happen is a nice surging candle to the upside, gets above that 410, and then we close going into the holiday weekend right at the 410 mark, which to me would be the beginning of a formation of a pivot high underneath support. Now, I could be completely wrong. I have no idea what Fridays do. They're usually pretty crazy. Let's move over to the Qs. This one's a little bit weaker just because it's below its moving average. That's fine. But it was a good participation for the tech, for the beat down tech. But once again, volume wasn't there. It did take its time. It came in a little bit late this week. We'll see what Fridays do. Fridays are, boy, man, they could go either way. Piece of bad news, we could erase this whole move to the upside. I imagine that we kind of park it here, maybe a shadow up or a shadow down, but kind of park it right about where we finished today. So here is our heat map. Once again, participation across the board. It's a bounce, and it's a strong bounce. We talk about this a lot here at Maverick. You guys have heard me plenty. Look at Tesla, up almost 7.5%. Walmart was just abused, and Target because of fundamental numbers, and they had a really, really strong bounce, both of them. as well. So I'm chalking it up to just that. Where's my weekly outlook? It's at a 0. Now, I apologize, folks, because I think, if somebody takes me technically here, this should be, I guess that's slightly above the 20-day moving average. So this below the 20 could be, I call it a yellow, right? But it really wouldn't change my outlook. I'm going to keep it at 0 because I have no idea what's going to happen tomorrow. I truly think that we maybe shoot higher and then come back down, or we just drop really hard and then come back up and just close pretty much where we're at right now. That would be the ideal move, especially with nothing bad or good coming out there, and it is a Friday going into an extended holiday weekend. Understand, folks, this is we have no market on Monday. However, I'm going to keep it at -3 on the monthly outlook because it's a bear rally. That's all it is. Now, guys, when I get later into the week, I have a hard time pulling up 16, 20 trades to look at. We've posted trades for the last week or so. Gosh, you guys can see videos on Monday, Tuesday, Wednesday. We've got them all over the place. So there's plenty to look at. What I did want to focus on are the ones that outperformed a pretty corrective bounce of the markets. A lot of the bulls did pull back, which is another reason why I think this is a bounce. A lot of my bulls didn't confirm. Now, look what did. Energy, right? USO, COP, NetEase, one that was just hanging in there, it wasn't falling apart. So let's take a look at a couple of these here. This is the United States Oil Fund. Awesome ascending triangle pattern if you guys are into those things. You can see right up against that 84.5 mark. Comes up and confirmed really nice to the upside. I was going to expect that these would roll over. I thought most of the energy would roll over, utilities, stuff that's outperforming, and it didn't. It really kind of participated with this big surge. So this was a pretty good round of short covering, and I do believe maybe a little bit of a load up on anticipation of at least a short-term bottom. So take that for what you will. But the sector's been outperforming, continues to outperform. That looks pretty good. Next one, shocker, energy, ConocoPhillips here. Nice breakout. Actually, 2 days ago, this would have been a nice purchase right around that 109, maybe even 110 yesterday, and up here it just kind of shot up. Now it's showing a little bit of resistance there, or I should say the shadow. It might have run out of steam because it has been up 4 straight days, including today, I should say. But a pullback around the 110, play something sideways, a little bit of a credit spread between the 105 115. That's always fun. Just make sure it just kind of stays in that area, and it might be kind of cool. Then the last one I thought I'd do is a bank, right? Didn't think a bank would show up, but it did. Nice confirmation to the upside. This actually had increased volume, which leads me to believe there might be something specific to this company that is outperforming and taking advantage of the surge that we've seen in the markets. Moving on to the sideways. There's a couple sideways trades here. This is BWA, an auto parts store. Now, a lot of these auto parts have been getting hurt. We have Pep Boys and stuff like that out there, but they had pretty decent bounces today. What I liked about this is it did also have its bounce, but it's still below that 40 resistance level. And what's really cool about this is it's got a nice channel between 36 and 40, and it has for quite a while. So any of you condor people out there, right, or want to do some shorter-term bearish, sideways to bearish credit spreads, Bollinger Band guys, they got to be squeezing tight here. So it's kind of something else to look at. Now I'm going to flip that on the other side. If you truly believe that this is a bottom and we've got another week or two to the upside, it might be a nice play of a breakout above 40 with a shorter term target up to what it was at, let's call it the end of June or end of January and into February of 42. It's a nice little shoot up to its resistance, cut it, and who cares where it goes from there, right? However, if you do believe that we might roll over even as well early as tomorrow or into Tuesday after holiday weekend, we'll see how the markets react. We're coming out of a holiday weekend. We're optimistic today. Let's see if we can carry this optimism into the weekend and see where it goes on Tuesday. However, if you think that's all that we've got here in this bounce, then a nice condor might be cooler or credit below 40. Coinbase. This one is a little interesting, and the reason being is because it's wider than you think. It's got this nice channel. It's like, geez, Joe, this thing's jumped up, and it's just candle for candle. Look how tight that is. It's not tight. That's between 60 and 70. That's a 10, $11, $12 range if you take the lows and highs into consideration. However, if you want to play like a 60, 70, 80 butterfly spread on that, or just a 60, 80 condor being your insides, that might work as well. So something sideways. However, this is going to be greatly affected by the most tumultuous thing in the world. cryptocurrencies. It was hilarious. I was taking a look in the Coinbase was not doing very well, and the reason why is because Bitcoin was down substantially this morning. It was falling apart, and it came running back 1,600 points to close just slightly lower for the day. So if you want to play a volatile game, there it is. It's fun. Just make sure you got the dollars for it. Let's take a look at some of the bears. Not a lot of bears confirmed. In fact, this is the only one on my list, and I've got 2 dozen that actually stayed lower. Every one of them has this nice green candle yesterday and today, but this is Unilever. We talked about this on Wednesday's class. It is an overseas, right? United Kingdom, so this is going to gap quite a bit up and down, so on and so forth. But I do like that it gapped yesterday. It's below the 44 mark. Sideways to down here, you got the target of the doji that it set late last week at about 42.5. So for what it is. It's difficult, folks, to put on trades this late in the week, especially if you're a week-to-week trader and you are going into a long weekend. However, if you've got confidence in your outlook, whether that be sideways, bullish, or bearish, it is sometimes kind of nice to set some stuff up options-wise that do bleed or give you credits. You get that extra day Monday. Come Tuesday, you're kind of left to see what happens. But we must treat this as a classic oversold bounce for now. I'm saying this for technicals. We went down. We set a lower pivot. We're coming back up on lower volume to a descending moving average, period. Where you stand economically, politically, what your outlook is, it's going to be right? We all follow our own stuff. Just make sure that you're aware of where your probabilities lie just on price action. So everything participated on average to lighter volume. That's, for me, I'd like to get into a bull here. I'd like to get into a bear here, but I can't really believe this move. It's just a continuation of what we were talking about last week and the expectation of a bounce. I think everybody in the world knows that this is bouncing right now, so we'll keep it there. We do have the PCE numbers out tomorrow. This is one that the Fed likes to watch. There's a few different ones. You guys can go through if you want to sit there and read through them. I don't know if that's going to change their outlook. Chances are they know what they expect to see. And if it does, it might come out and post a headline, and then we could erase everything we gained today. Or it could be right on track, and we get a nice little surge to the upside, and we kind of finish right where we are today. So the Fed remains on aggressive track, but they're optimistic. That's what I was talking about a little earlier. So the consumer is keeping up right now, and it's really cool to see that we could create a soft landing with a determined consumer that's okay paying higher prices through the summer. That's it. If we can stay employed and everything's good, and we get through this, and we can actually see inflation start to come down, this market will explode to the upside. That is for sure. So earnings reports. Now here's a little bit of a hiccup. I was building this class, guys, and I try to get this class as fast as I can, but I do miss announcements sometimes. I was able to grab a couple. Costco hit $1 billion, great, but they were short on the same store sales, and they're currently down about 3.5%. We got Workday down about 8.5%. I didn't get their numbers. I do think they were light on projections. Autodesk, I didn't get Autodesk or Dell, but Gap. Here's another problem. I think Gap was trading down 12.5%. So all three of the ones that I looked at of these are already lower. I'm not sure if that's just the initial reaction, folks. These can kind of turn around, and tomorrow maybe they're all up. So I just want to tell you that the initial reaction for these, Costco, at least the ones I have, Costco, Workday, and Gap, are slightly lower than where they, significantly lower for Gap and where they close. So take that for what you will. Does that spill over in tomorrow and completely we erase everything that we did today? Or does this bullish momentum kind of kick those stocks aside and say, you know what, we're on track to bounce, let's just keep going? So it's going to be a pretty interesting day, and it could set the tone over the weekend and into Tuesday. All right, guys, well, thanks so much for joining me. I appreciate it, and we'll talk to you next time. Bye, everybody.